friends, you're welcome to my channel. Please click the subscribe button to stay tuned for more updates. Today I'm going to show you how to trade forex without losing. You don't need to gamble in the market. If you have the opportunity to interview any professional trader, they will tell you that there are two ways you can make money from the market. It's either you use your money to make money, or you use your skill to make money, like those patterns, those drawing trend lines, and those are retail strategy to pick a little from the market. But the real investor traders, they don't do all that. All they know is that the overall trend, the market moves in a supply and demand zone. So the market moves in a supply and demand zone. The market moves in a zigzag pattern. The market can just spike up market can just spike up like that without pulling back. That's why it's called trading. It has to retrace back. So they capitalize on that opportunity. They capitalize using that opportunity to make money. The investor trader don't draw pattern, don't draw harmonic chart. They don't. All they know is that the market moves in a supply and demand zone. It's either they are buying at key level or they are selling at key level. All they know is that they're using the proper risk management. Okay, that's how it works. And today I'm going to show you that strategy. That strategy is not in any manual, it's not in any channel, and it's a secret a lot of people are using to cash out. You use money to make money, and it's being used with the monthly, weekly, and daily charts. Because if you use those levels, you are going to be more consistent with your winnings. Understand me? So what I'm trying to say is that in the forex market, there's a lot of secrets. That's why they say only the 5% win in the forex market, because the 5% don't want to give out this secret. This strategy, a lot of robots you see in the market are using this strategy. They are just giving it different names. All of them are using this strategy. And that's why some robots, when you complain that the robot is not doing well, it's because you're using it in the wrong time frame. If you're using it in the right time frame, it's going to give you consistent profit, but slow, because all of them are built on this strategy. Any robot that is not using this strategy is not going to be profitable in the long run. Yes, because the market moves in a supply and demand zone in a zigzag pattern. This strategy is going to give you consistent winning, no losing. There is no losing. You make money without ceasing. It's not a gambling. This is a strategy that has been there, and all you need to make money from this strategy is good money management skill. Now let's go down to business. This is a monthly chart. You look at what you need to look at is the current trend or the previous trend. You can look at the current trend or the previous trend. Now, if the market is going up, in the monthly chart, you just draw a Fibonacci adjustment like this. You now go to the weekly or daily to look at what it's doing. Now, while the market is going up, you can see the key levels. Now, if the market, when it's going up, it's going to create key levels. And don't forget, this is a monthly level. They are very reliable support and resistance. So what you need to do is that, with your basic forex knowledge of double top, when you see a double top in a daily chart, it means that there's going to be likely that's a double top. When you see double top forms, it takes a longer time in a daily chart, so it's very reliable. So when you see a double top like this in a daily chart, it takes time to form this pattern. You see a double bottom like this in a month, in a daily chart, it takes time to form this pattern, so they are reliable more than a lower time frame like 15 minutes. So when you see the market, you have already seen the monthly trend going up, and what you are doing is that if the market is coming down, you are going to buy at the key levels. You are going to buy at the key levels because the overall trend of a currency is up. This is where they talk of, we hear buy the dip. They're not buying anyhow. They buy at key levels. So as an investor trader, what you need to do is that once the market gets at the Fibonacci level, you can buy with 0.01 based on the calculation you are using. You get to the next Fibonacci level, you can buy at 0.01 again, or 0.02. The next one you can buy at 0.02 or 0.03. I don't know if you understand, because at the long run the market is going to bounce back, and since these are monthly level, there is no how the market comes here without pulling back. There is no how. So assuming now market came down here, you bought, there is no how you not be in profit. Let's assume it came down here, you bought. This is always your take profit. Whenever the market comes to here, this here becomes your take profit. When it comes to here, becomes your take profit. When it comes to here, becomes your take profit. That's how the strategy works. You buy at key levels. It's a very simple strategy that requires risk, money management, and it requires patience. You don't trade actively like retail traders. In the money is forming double top in the money. No. What you are doing is that you've already known what the monthly chart is doing. So if the market is coming down, you are buying the dip. So at the key level, so that's even here when they say 5% are successful in the forex industry. The 5% are doing. They know what you don't know. So you try to know what those 5% knows. Those 5% that are surviving in industry, they have the skill. What they do, they look for investors. They look for fun, and when they have the liquidity, this is what they do. They know that an overall trade, they don't trade every day like you. They find one pair. You can trade one pair and be successful. They find one pair, go to the monthly chart, know the key levels, and be back. And when the market is pulling back, they are buying the dip. The market is pulling back, they are buying the dip, because at the long run, the overall, at the end of the year, they will have a good growth. They will make money, because the fact is that I don't know how to stress this enough. This level you are seeing here is a monthly level. There is no how in most cases the market always pull back. If at all the trend is so strong, if it doesn't pull back here, to pull back here. If it doesn't pull back here, to pull back here. So using the right martingale calculation, you will always cash out. So if you need more, if you have any question about this strategy, you can drop your comments you can drop your question on the comment section. I'll reply you. Okay, so now you can actually use this review. Go start practicing on your own. The market moves in the supply and demand. What I mean by supply and demand is this: up, down, up, down, up, down, up, down. That's how the market moves. So this strategy will always give you the money. You don't need to panic. What makes a lot of retail traders, 90% of retail traders, lose money is the panic. When they are buying, the market is selling, they close the trade. Hey, it's going to hit my stop loss. They close the trade. You are closing the trade because you use a lot size you are not comfortable with. You are closing the trade because you're using the wrong strategy. If the market is coming down, you buy. You leave it. It's coming down to the next level. You use the right, you can double the stake. 0.01, use 0.02, you buy again. Now when you buy again, this level now becomes a take profit. You are going to make money. Don't worry, it comes here. Use 0.04. These are monthly levels, so the market is likely going to give you a profit. So it's because you're panicking. That's why you're closing your trade in losses. This is a strategy that your money makes money for you. You don't lose it in this market. So when you hear the professional traders say that they don't use stop loss, don't doubt it. This is what they do. So if you have any question, you can always, like I said before, drop in the comment section. I'll reply you. All right, thanks for watching to the end. Have a great day. Bye.